Yeah, the testing. This is called stress testing. Like human beings, every say example nowadays, even I can say 25, 30 years, people also need to go because of this lifestyle. Otherwise, earlier days, 40 or 50 years, every year they have to go for a medical checkup. In medical checkup, there's a one test called stress test, treadmill test, which is nothing but how your heart is functioning effectively and efficiently to ensure that you live longer. Similarly, the finance also having a stress test. The stress test in finance word is come from banking industry first. The origin is banking sector because they borrowed from banking to access resilience under adverse conditions. It means every bank cannot have a deposits continuously or loans continuously or advances. They will have mixed bag. So the more advances, more risk, the more deposits, then they have a higher risk because the liability on the bank is more on to pay and do that liquidity issue will come. So then they started doing a stress test to make it that they have a CASA ratio, current account ratio, and all those things to analyze that so that the bank is stable in their financial system. Similarly, GST application, it is implicating here, simulating scenarios where timelines are missed or vendor filings are delayed. So in GST is concerned, 2 points are there. One is you have to file your returns only on time, whether it's a monthly payment, monthly return, or monthly payment, quarterly return. And then your payment of taxes. If it is monthly payment, quarterly return, then you can have input rate up to once in a quarter. In that case, you need to reconcile the previous quarter very correctly to get the right benefit. And then risk measurement measures how well finance processes withstand with the GST time bar constraint. The risk measures is nothing but a strict guidelines for reconciliations, and then a support system is required for doing a reconciliation, whether it's a SAP, Oracle, Microsoft Dynamics 365, or softwares like WebSol, which will enable you to give a lot of time saving with accurate reconciliations so that you save a lot of money. It may be a one-time investment on ERP and systems, but the result is like continuous benefits you are going to get it instead of depending on manual systems. So that will give you a risk analysis where you can find out in your monthly meetings to check whether your inputs are taken correctly, your filing is taken correctly, your compliances are meeting correctly. You can put it as a checklist to measure your risk. Next, please. Yeah, the stress testing framework is identified into 5 parts. One is identify your transactions. All your GST linked transactions, time bar deadlines such as unclaimed ITC or pending credit notes or debit notes, you need to check it thoroughly. Then map dependencies, identify who delays the GSTR1 filing or internal bottlenecks as explained in the beginning, whether it's a whether we have is not having sufficient team to handle GST or not having proper systems to delay. Then we have issues in this. Then you have to identify what is the bottleneck for invoice processing, quantify exposure, calculate potential credit loss if any deadlines are missed, and that needs to be reported to the audit committee and management. Evaluate controls, check overflow approvals, reconciliations, frequency, and compliance calendars. Don't think that reconciliation is a continuous process. At the same time, it is only just year ending. When it comes year ending, we can say all at one time. It has to be a monthly systematic rhythm. We have to do all our reconciliations with the GST portal, GST books of accounts with the GST 2B or 2A to ensure that our organization is not losing money. And then present the stress test report to management and audit committee for timely intervention. Because there's a huge amount of impact. One is on working capital, the other one is P&L account. So for these two, management is responsible for answering to audit committees. So we have to inform them in advance and give a heads up. And if you have any constraints, please speak to them so that they can support with the constraints where you can come out of these issues. Next, please. Next slide. Yeah. This analytical dashboard example, I'll just give you ITC monitoring, where your input credit, how you can monitor, visualize ITC claimed versus ITC available, ITC aging versus credit note issuance trends, how it is moving, whether your book sales in current month and then again next month or next to next month, reverse entire sales by way credit note, again raise invoice, then it will have a lot of indiscipline in books of accounts and government is also will view very seriously. Then vendor compliances, this is very, very critical risk, I can say. All vendors are not sincere to upload the invoices as they given to you. So if the next month if not coming into the portal, you need to chase them to upload. Otherwise, you are going to lose the money. And then, as I said, integration of SAP Oracle into AutoFlag and risk credits to nearing expiry. So get some alerts by way of SMS, by way of emails, or by way of your screen saving things, where you can say next 2 days your deadline for input credit reconciliation. Next 2 days is last date for filing your quarterly return. Like that, it has to come into the system.